All right, so we see people hopping on. Amelia, this is recording, right, Amelia?
Yes.
All right, awesome. So we got a bunch of people jumping on. Good to see everybody. Some of you guys I got to see this morning. Look at that. Look at that, Mr. Quest IRA walking through. He's even making sure everybody can see where he's walking through.
I'll mute myself over there.
Saw some of you guys this morning on Sunrisers. That was a really good meeting this morning, Wendy.
Thank you for being there.
Very good.
And then she had David Phelps yesterday talking about burn rate, which is something we all better make sure we take a really close eyes at over the next couple months. If you're not on that, make sure that know what your burn rate is. So we just normally let this go a couple minutes, let people kind of get on, jump on, and then we kind of get into this call a little bit. I do want to remind everybody, if for some reason you are planning on going to the Free for All event September 30th through October 2nd, it is coming up here in about 3 weeks. I know a lot of us got really super busy weeks. Jim Ingersoll's Deal Makers next week. I'm excited about being there. And I can't wait. Jim, why don't you just give everybody a quick, just obviously you're sold out, but like if you're interested in future deal makers, or if they for some reason can squeeze them in here, just give us a little bit about your deal maker.
Do that to me, Tom. No, we have a long waiting list. Actually, it's a pretty good sized waiting list, and it's always tempting to like squeeze more in, but it's not easily done. So, yeah, we're looking forward to it. We're kicking off Tuesday, Wednesday, Thursday. Tom, I'm so glad you're coming. Look forward to seeing you in a couple days.
That's going to be a fun
settlement trip there.
And then the week after this, if you guys haven't booked your tickets and you can make it to the Quest Expo in Houston, I would highly, highly, highly recommend that. To me, that is one of the biggest, best events of the year. You do not want to miss that event. I see a lot of people that are here that are going to be at that event. So make sure questtrust.com. I'm sure you can find tickets there. Derek's even walking through the airport, looks like.
I think he's coming to see me.
Yeah, he's coming. Yeah, he's on his way to Richmond. I'll be there Monday. But anyways, make sure you guys are signed up for those events as well. So what is going on with real estate? That's kind of what we're here for today. But I do have a quick announcement about the next 2 calls. So just so you guys know, I do these free calls every single month. Try to bring in somebody that I think is going to be of super value and ask them hard questions. Like we go at it hard. The next one is going to be really niche to acquisitions. And we've got Jennifer Stewart. A lot of people know her. And I think her strong suit is in understanding marketing and lead generation, negotiations and closing. So I would even encourage getting your team, maybe if your acquisitions department on that call. I promise you it'll be worth their time. She's helped me and our team quite a bit personally. So I can definitely, let you guys know that this is not just something that I'm just saying and somebody that I'm bringing on, but somebody that I'm working with. So Jennifer Stewart will be next call. It'll be October 8th. That is a Saturday at 10 a.m. And then the call after that will be Tom Barry. I see Tom on here. I'm not sure. I think Jennifer was supposed to be on here, but there's too many people for me to see everybody. But Tom will be coming, and I'm not quite sure what he's going to talk about, but Tom is always a fun person to be around. Tons of knowledge. I think he's got more knowledge in that pinky of his than some of us have in our whole bodies. But love to spend time with Tom Barry on November 12th. Same type of deal there with Tom. So we're going to get right into it. I'm going to have a quick introduction to each person, and let you guys know a little bit how I know them. And then I'm going to let them introduce themselves as well. And then really, we're just going to ask about 4 or 5 questions. If you guys have specific questions, please put them in the chat bar. I know there's going to probably be a lot of chat today. But if you have questions about, what do you see going on in the market, and maybe specific questions, I don't want to get too rabbit holed into certain things. But I'd love to be able to help if somebody has some big outlier type of questions. I'm trying to do this call specifically because I believe the real estate market is shifting. And data is always lagging. I think that's the one thing we do that I've kind of seen this week. There's people that don't know their market has shifted, and it's already shifted because, this month was my best month of closings ever. Well, guess what? Like those closings that you had were put under contract 2, 3, 4 months ago, and now they're actually closing. But what do you have actually listed and pending right now? That'll kind of tell you what's going on. And with my wife owning a brokerage and having all the listings that we get to see, we're seeing a whole different type of data set than we saw 3, 6 months ago. And just us, boots on the ground, just looking at different markets from what's being listed every day, how many houses are going pending, how many price reductions are happening on a daily basis, is like it starts small. Like, I'm not saying that it's just this big, huge thing that's going to like overtake all of us overnight. Real estate's a longer game. It takes longer for things to go down in price, longer for things to go up in price. But I thought, hey, let's bring on the experts, people around the country, and they see things from a completely different perspective. A lender, we got somebody working with mobile homes on land. Jim's in a couple different markets. Eddie's all over the place, and also has a lot of data from a lot of different American Association of Private Lenders and Think Realty as well. And I wanted to bring everybody on to just kind of add value to everybody. And really that's it. Like, that's the whole purpose for these calls. So let's just start quick. We're going to go, I have everybody in an order of how they got on, how quickly they got on, as far as the panel members are concerned. I had Tom Nardone first. So why don't we start with you, Tom? Let's just tell everybody quickly about who you are and what you do.
Sure. I'm originally from the Northeast. I found my way to the Fort Lauderdale, Boca Raton area of Florida back when I was 19 years old. And I got a job as a mailman in Fort Lauderdale. And as a result of that job, I'd be walking around, driving around all day, delivering the mail, and I'd see rundown houses. So I started buying those houses and renting them out. And that's how I got started in the business. I got started from, I like to say, the original guys like Jim Napier, John Schaub, Jack Miller, and they were primarily buy and hold. So for years I did buy and hold. Here I am at age 63 now, and I've transitioned my model to more about building and selling and doing mobile homes on land and actually selling those at full retail. And it's been working really good.
So right now you're basically doing that retail, and that's your business, buying and selling retail.
Right now, yes. And
Okay.
Some of those properties we're setting up to be Airbnbs as well, because
Gotcha.
in the mobile home market, you could get into that property for very low down. And when you calculate your investment in the property versus your return, it's really lucrative.
Yeah, and I'll tell you, I went down to see Tom myself in some of his markets, saw some of his houses that he's doing in a really nice area. A lot of people moving to Florida right now. If you ask me, I think Florida is the new California for the next 10 years. And it's just amazing. We've seen like how much houses have gone up in value in such a very short period of time. And maybe they come down, maybe there's a little bit of a bump there, but in the long run, I think that you're super safe in, Texas, Florida. So I know Tom from that level, been to his events as well. Great guy. Love spending time with him. Glenn Stromberg, been friends for about 10, 15 years or something like that. It's been a long time. Mobile homes on land, real estate, as some people like to say, right, Glenn?
Absolutely. Thanks for having me, Tom. And hey, great to see everybody. A lot of good friends on this call. Great to see everybody. Yeah, like Tom said, I use the word mobile home manufactured half the time. They both mean the same thing. These are not mobile home parks. We're buying homes on land. They have a deed of trust or a mortgage on it. We do it in 5 states, in Texas, North Carolina, South Carolina, Georgia, and now Florida, because I went to Tom Nardone's event too. And I agree with what you said. Florida's going to be a great place to be. So what our model is, what we do, we buy the home, we fix it up like new, we put a tenant in every one of them. Up until recently, we've been doing mostly turnkey. Eddie Wilson's on this call. Him and I are getting ready to launch a fund together. And so we're doing a fund. And so we're excited about that. And like I said, I feel affordable housing, especially with where the market is today, is a great place to be. Like I say, I always say people are going to do, there's 2 things people got to do. They got to eat first, have a roof over their head second. Everything else is negotiable. And we've got the most affordable group. So we feel good about where we're at right now. So.
Awesome. Thank you, Glenn. Like I said, know him. I can't speak more highly of anybody. Glenn has been super awesome to work with, which is the case with every single person on this call. Awesome rock stars here. So Wendy Sweet, just got to see you on Sunrisers. Why don't you give everybody a little bit about who you are and what you do?
Awesome. Thank you so much. I'm honored to be part of this panel. Pretty incredible people. And all of you in the room, I see so many people. I know I'm going to be able to hug your neck next week, and I'm looking forward to that too. So I am a hard money lender, Carolina Hard Money. I've been lending for 20 years, a little over 20 years, actually. My brother and I together manage a fund. We do loans for not only fix and flip and new construction, but we also do a lot of small business, self-storage, multi-tenanted commercial, that kind of thing. So that's what, butters my bread, I should say. But I also love the self-storage business. Just now got into that. I'm loving every minute of that. Also short-term rentals, mid-term rentals, corporate rentals, great business to be in. And, we love that recession resistant market. And, we're looking forward to what's happening right now.
That's true. And to a certain degree, I think Wendy's 100% spotted, but I think seeing different things happening from a lender's perspective is a great perspective. You can kind of see all your borrowers and you can see what's going on. How quick are these things actually selling when they're listed, and what's happening from there. So Wendy, do you have stuff in Florida?
I do. I love
Okay.
Florida. And yes, it might be the new California without the political insanity.
Yeah.
That's what I meant. So absolutely. I was going to say that, but I knew everybody else had stuff going on in Florida. But I wasn't sure about Wendy. I know it's funny. I actually bought a house on the same street that Wendy used to live on and didn't even know it until about a year after owning that property. Same thing with Jim Ingersoll. I've known him for about a year before we realized that we grew up in the same city, Jamestown, New York. So let's move on to Jim. A lot of you guys know Jim Ingersoll, super awesome guy. Next week's event is going to be amazing with Dealmaker. So happy to have him on the call today. Tell everybody a little bit about who you are, Jim, and what do you do?
Jim Ingersoll, I'm Tom's friend. No, I'm a buy and hold investor primarily in both Virginia and in Florida, like these other folks. Florida has been really good for the last couple of years for me as well. Do a little bit of new construction in Florida also, and just love being a landlord. Back in in the old days, Tom, there was only one way to be a landlord, just regular landlord. But now you can be a regular landlord, you can do corporate, and you can do short term. I do all three. I love all three. And all three of them have been really, really good. So it's an honor to be here with you, Tom.
I agree. And I've seen Jim do this stuff. He doesn't talk a lot about what he does. He brings everybody else on and wants everybody else, but he's the real brains. And he engineer background. I think the engineer part of him comes out in his deals. But love Jim, love spending time with him. Can't wait to see him next week. Thanks, Jim, for being on the call. And then last but not least, let's get to Eddie Wilson. Owns a bunch of property in Cleveland, all over the United States, doing stuff in Florida. Big missions minded person, which I love that as well about Eddie. Want to tell everybody about who you are and what you do for the people that don't know?
Sure. Yeah. Eddie Wilson here. I would consider myself a private equity investor. It just so happens that I see real estate as private equity as well. Have a lot of companies and other assets. Some of the companies you guys might know is I own Think Realty and own the American Association of Private Lenders. And then have a bunch of other assets like coffee company and various other things. Have around 4,000 doors now between single family and multifamily. And, really believe in affordable housing and creating affordable housing for others. And that's why Glenn and I teamed up last month to create the fund that we have. And just to allow others to passively start helping us solve affordable housing issues in 4 or 5 states. So that's who I am.
Thanks, Eddie. All right. So the whole reason why we're on this call is bringing on these experts that you can see and like what is going on. So what in the world is going on? I'm going to kind of go in backwards order for the next one. So Eddie, why don't you just tell us what do you see is going on? You get to see a lot of data from a big picture. And maybe that'll be a good place to start here for us.
Yeah, I mean, I think what's going on, right now is a little inflated, and it's more of a perception issue, I believe, than a tactical real issue. You know, and then most of what we're feeling right now, I think, is intentionally given to us by the powers that be. And so, you know, for me, as I look at where we are today, there's still some stats that I hold on to. And, you know, after interest rates have risen, we still see a demand of right around 5.5 to 5.7 million homes. Currently, that would be the August number. But more than that, Tom, I think, you know, a lot of people talk about that 6 million homes underbuilt type number, but the number that I'm most interested in is if the market is so bad in real estate, then I've talked to the four largest hedge funds in the past 30 days. And between the four of them, they have full intention within the next 12 months to acquire 1.32 million homes between the four largest hedge funds. So they always say if you want to be smart, follow smart money. And you got the four largest hedge funds in the world that deal in real estate that are saying we're gonna acquire another 1.32 million homes, and that doesn't include, you know, the next 30 hedge funds after that. And so, you know, if there's 5.5 million homes, if we're 5.5 million homes underbuilt, add another, you know, 1.3 million to the top of that. That's going to be pulled right out of affordable housing because that's what these hedge funds buy. And so to me, that's where I see it. I think the real estate market is as robust as ever. And I think it's really perception that is holding it back.
I'd love to get into that more, but we got other people to talk to it, and definitely love that perspective. And this is kind of how I'm approaching this as well. Like, I think in the next 2 years, like, this is a great opportunity because perception says everything is going down. Everything is going to be going crazy. And although we might see a little bit of that, I think there was a little bit of inflation just built into the COVID era. It's never as bad as you hear it is going to be. And I think as Christians, and I think a lot of people on this call are Christian and resonate with that, we should know that. We should understand that it's never as bad as we fear and never really as easy as we hope for. It's always somewhere in between there. So I love that perspective, and love the fact that and that's what we decided to go to, is just focus on our fundamentals. And if it hits our regular fundamentals before COVID, then we're moving forward. We have 15 houses under contract right now, and we're moving forward because we know where we're at and what we believe is going on. We already have buyers lined up to be able to buy the properties that we just purchased already, and we're not wholesaling. So we got turnkey buyers that want these properties, and the cash flow is there, and they're great assets long term. So love that perspective. Jim, how you doing? What are you seeing?
Life is good.
You're in Richmond, and Richmond hasn't even seen a lot of listings yet. So love to hear your perspective on.
Well, I mean, I was looking because I agree with Eddie. Well, of course, any smart person would, by the way, because all the headlines and the clickbait and all this stuff is, you got to like get back to the data. And that's why I loved what you said, Eddie. But so I started looking at the data in a couple of markets I'm in, and here in Richmond, we have 1.1 months of inventory. I mean, that's not much, is it? 5 weeks. And then one of the markets I like in Florida that I own a lot of rentals around is Lakeland, Florida. It's a smaller market though. 1.6 months. Balanced is 6 months. So there's not much inventory. In the last 4 weeks in Richmond, there's been 341 new listings and 428 pending. So to me, those numbers say the inventory may be flat or dropping. I mean, I don't know. And if you look at the August median price in your market, you get a good feel for how it did this August versus last August, all that's available. So I just encourage everyone, it's hyper local. Even within the Richmond market, certain areas are stronger than others. Some areas are still getting multiple offers. Some areas are not. Some areas are sitting and getting price cuts, and other areas are getting multiple offers. So it's all very hyper local. But if you buy for the right fundamentals and you buy with the right leverage, then it doesn't really matter anyways, in my opinion.
Very good points. Hyper local. It's even interesting in my market. Like I have Gary, which is part of my market, and the rest of Lake County, and it's completely two different things happening right
Sure.
now. I love it tees me right up to be able to do what we do. But even in my Pensacola market, we're seeing more listings on a daily basis than houses going pending. So it doesn't, and that's not a bad thing. I want to make sure that we understand just because that's what's happening doesn't necessarily, we need to get back to a normalized, what is normal? 3 months worth of inventory on the MLS. So, I think those are great points, Jim. This is an opportunity. Stick to the fundamentals. If the fundamentals work, hey, like that's what we're here for.
That's
We're
the
investing.
talking points, and enjoy the rent increase. Because it's a great hedge on inflation, but just don't be greedy and price your tenants out of your own property. That's the balance point.
I
Mhm.
agree 100%. Thank you, Jim, for that. Appreciate that. I'm glad he hit that. I was going to hit that a little bit later, but maybe we'll see what Wendy has to say on rents. But so Wendy, what are you saying?
What we're really
There we
seeing, and
legend.
I'm in a lot of different markets because we're all over the Southeast. And the term hyper focused it's in your market is so real. And it even goes from neighborhood to neighborhood, and price range is really important.
Yes, it does.
But really, really important. And so you just have to, buying outside of a market, is a dangerous place to be right now, because you really need to understand what's going on in that particular market. And really the average, what it has been in the past to be, days on market or to have available inventory is really in the 5 to 6 month range. That's normal. So we're still so much better than what normal has been, but you really, really need to stay focused per market on where you're going and what you're doing. And what's really interesting, if from a lender's point of view, we're able to see not only new loans coming in and what that pipeline looks like and the deals that people are getting, but we're also seeing on the payoff end how quickly houses are selling and what they're really selling for at this point. So we get a great bird's eye view of what's going on in the markets. And, we really, I would say 45 days ago, saw a real decline in sales, not only in the number of sales, but what the asking price is. People are paying less than the asking price. We talked about that this morning too on Sunrisers, that we're now in a negotiating market. Sellers are starting to have to pay for some closing costs. They're having to negotiate to get their houses sold. We had a bankruptcy attorney on this morning that was talking about what's going on from his standpoint. That guy is truly in the trenches. He works with people who are trying to basically get out of paying their creditors. So not just filing bankruptcy, but not paying their credit cards. And I love the way he put it. He said, in 2020, we had this helicopter money that was flowing down, and all of a sudden, the US, everybody in the US had a great savings account, and the very little debt, and they're spending like crazy. And now we have literally tanked well below where we have been in years for having no money in savings and our credit being off the charts. So he's seeing a huge rise in that, and a huge rise in people filing for bankruptcy. So we need to be looking forward to houses that are now going into bankruptcy that we'll be able to take over as subject to, or buy those liens from a trustee. There's all kinds of options that are out there as investors now.
Yeah, the other data point that got brought up this morning was mortgage applications. Mortgage applications right now, and I even had somebody on my Active Turnkey website podcast 2 weeks ago, and he just deals with investors only, which actually kind of this actually surprised me. He said that it's dropped 80%. So he has 80% less applications. And this is a guy that is like typically only investors. So like, which
Is that
again, I think goes
Aaron?
back to, no, it wasn't Aaron. It was actually Jerry. So Jerry Padilla
Okay.
in the Good Success Mastermind.
Gotcha.
He said that he used, and it's actually interesting because we're seeing our deals happen much quicker. Like we're getting 30-day closings. How long has it been since we had a 30-day closing from, I'm like, it's happening. Like every single deal they want to close early, and we're like, what is going on? So mortgage applications are way down. That is definitely, something that is that won't show in the data today, but will show 3-6 months from now.
Well, a lot of that may be refi. Who in the right mind is going to be refi?
Absolutely. So that's
Yeah.
definitely part of the equation as well.
So you got
Well, I'll
to
tell you
dig down
this-
on your data.
Also for us as, hard money lenders, private money lenders, our pipeline is down. We're probably down 30-35% of what we normally have. So that I think is very interesting that that's happening. Now, we don't expect that to last because I think people are being smart, that they're waiting for the deals to happen because the wholesalers haven't quite caught on, most wholesalers haven't quite caught on that, hey, I just got a house under contract. Well, they got it under contract because they're paying too much for it.
Right.
But our investors are smart enough to know that at this point. So I think we're going to see that for a couple of months.
I think that's right. I think the smart investors are staying in, and a lot of the newer investors have got out, or they're sitting on a house for a month and they've never sat in a house before. They don't know what this feels like to actually have to sit in a house on the MLS. So great words of wisdom. Love that, Wendy. Love that perspective. That was really good this morning with that attorney you had on as well. Glenn, your market's totally different than all of ours. So what is going on? Are you taking advantage of this opportunity? What do you see happening right now?
Yeah, and first of all, I agree with everything the previous panelists said, the macro outlook and so forth. And really, I feel like, 2008 is starting to happen. That's what I feel. I feel, and I'll be specific, like of course, I only do mobile manufactured homes. That's all I do. So, I don't have as much competition as the single family houses go, but I'll use Texas. I'll use Texas as an example. Okay. There was a period of time we couldn't buy a house in Texas. We just couldn't buy one, right? And now we can't buy all the properties that are available in Texas. I mean, the market is definitely coming to us. 6 months ago, if you didn't give a full price offer, people would tell you, just forget it, right? Now they're calling us back multiple times, dropping the prices, and so yeah, the market is definitely shifting for us in that area. One of the things I think we have around 550 doors under management right now. And one of the things that we are seeing is there's some people hurting out there. There's some people that are, that they're, once again, inflation's real, right? Inflation is real. And so, yeah, there's people that are hurting. There's some people that are, we had kind of an uptick in people that are behind right now, but are we worried about it? Not in any way, shape, or form, because not only have rents gone up substantially, but the phones are ringing off the hook for the houses, right? And it's kind of crazy how, and once again, using Texas as an example, we had some properties, and some of them might have been 2-year leases that were $1,200 a month, and we're renewing them at $1,900 a month. That's how fast they're going up right now, right? So, and I think 2008 taught us this, that with interest rates rising, there's less people that probably can buy. They don't have the down payment. They can't afford the monthly payment. So more people go into the rental side, right? So, and we're starting to see that. We're starting to see where, it's crazy. Like I Googled in Texas, the average rent for a 3-bedroom is $2,500 a month now. That's the average if you in apartments, everything else. And so, the rental side, I think Jim said it earlier, it's tremendous inflation hedge. And I see rents really going up even more. And I think it's from a real estate investor point of view, I think we're in a really good place right now. And I think the next 6 months, it's even going to get better for us, maybe not for the economy, but better for us. That's what I think.
Awesome. Thank you, Glenn. I'm glad you talked about rents. Rents are like taxes. Like they go up and they never come back down. I don't know. I have never seen it. I've never seen it happen. You know, I heard of some very, very small little tiny markets in 2008 that softened just a little bit during that period of time. But I know most of the people that are on this call, myself included, rents went up during 2008. And here it's like they went up before we're having this crash. I'm not sure they're going to continue to go up at the pace that they've gone up, but I don't believe that they're coming back down. And I totally agree with that. I love that. But so have taxes and insurance. So taxes and insurance is also another thing that I think is feeding inflation. Nobody's even talking about. Taxes have gone berserk in especially Florida and Texas. Those taxes are going insane. And their insurance in Florida, you know, like it's expensive to own property in Florida when it comes to insurance. So definitely good points. Tom, let's move over to you, sir. Love to hear what you have to say. What do you see going on right now in the market?
Sure. Well, remember, my home base is actually on the East Coast in that Boca Raton, Fort Lauderdale area. And my personal experience there is I have a high-end home that we put on the market about 4 months ago. We put it on right at around 2. And it was a name your price market like the day before I listed it and put it on the market. So we've reduced our sale price. Now we're down, I think, 1.675 or so. And we barely get a text message or a call, but once a month. And we're marketing the heck out of it. So, but that's the higher end. I think anything in that area that's below 600,000 has become more of a normal price range for people to pay. In West Palm Beach, I was helping my niece market her house. She put it on the market about 7 or 8 weeks ago, and she put it on at 525, and she had literally 20 realtors standing in front of their house the first day with prospects to bring through the house, and it was an overbid. They wound up actually selling it at around 555, somewhere in that area. So it went above asking. But again, this market's changing fast in some areas. So that was about 7 or 8 weeks ago. So as accurate as that information is today, it's what it was about 2 months ago. The market I've been focusing on, however, is the west coast of Florida, just about 2.5 hour drive over here. And as you know, Tom and Wendy, you guys have visited this area between Fort Myers and Sarasota. So this area here, man, I'll tell you, it might be a little insulated fantasy land we live in here, but it got just a little bit slow. My local brokers tell me here, because I'm not a real estate agent or a broker, but you know, I'm connected with guys that are always in the market every day, and they say it got slow for a couple of weeks, but it really heated up again about 2 or 3 weeks back. And people are still buying like crazy in this Punta Gorda, Port Charlotte, Northport, all the way up to Sarasota, this little corridor right here. And in fact, an investor friend of mine, Gunter, few of you guys might know him. We actually took a trip up to Orlando the day before yesterday, and we were just on the west side of Disney World. And as far as you could see, there was big multi-unit complexes going up with thousands and thousands of doors. We were just blown away how, as far as the eye could see, you could see these big projects going up. And we know that there's a lot of smart minds behind these big projects that are projecting the future and looking at, you know, the future of housing, and that it's still moving forward. So this area over here on the west coast of Florida and that central Florida area is really hot. Right now we're building, as far as site build homes, I got 8 site build homes right now we're building, and there's still plenty of buyers stacked up to buy those. We're going to offer those to the marketplace in about the 600,000 range. The mobile homes I'm doing, we brought in one about 2 weeks ago. It's almost finished setting up. I got another one coming in next week and the following week. Those we're going to offer to the marketplace at about 275. So that central Florida market, you know, if you can offer a really nice 4-bedroom, 2-bath mobile home to the central Florida market for 250 to 275, it'll still sell pretty quickly. And a lot of the a lot of the sales in general that are going on in this West Florida market, by the way, still tend to be cash sales, you know, up to like 400,000. So it's kind of full speed ahead here. We plan on building a lot more here in a build to sell model. And some of those we'll keep for ourselves and make them Airbnbs because they're, you know, we're in a coastal area and people want to be here for vacation purposes for an Airbnb. So that's the model we're looking at right now. And it's still moving along very well.
Awesome. And I think it goes back to hyper location focus. So, you know, knowing those, there's going to be pockets, you know, something that was so interesting to me. I have no idea who told me this, but I saw a presentation about, I don't know, 7-8 years ago that talked about the 2007-2008 crash. And while a big market like Dallas, for instance, was kind of flat, and Dallas never really went down. If you looked at the prices in Dallas, the housing prices never really went down. But then you look at a market very similar in size at the time, like Boston, like they went down 50%. I mean, I think the average house went from like 600 to 300. So like there's going to be completely different markets all around the country, like that like are in different sizes and different, you know, shapes. And Punta Gorda is not a super large market by any means. So very, very, very interesting there. Hyper focused.
You know, Tom, if it's okay, I'd like to tag something real quick with what Tom Nardone said about the short-term rentals, Airbnb. Be very careful if you're going into an Airbnb or any kind of short-term vacation rentals. The things that get hit the most when a recession happens is the beach and the mountains. And if you've got Airbnbs elsewhere, they kind of stay level. But when it's in a vacation area, you know, the recession will make a difference on that. So it's a great time to buy property for sure for short-term rentals. But just when you're using your numbers, just use numbers that are, you know, if you're using a 65% occupancy, go ahead and drop that to 50. Just make sure you're really conservative on your income to make sure you can get through the recession period. It is a great time to buy.
Yeah, and Tom
Good
Barry.
advice, Wendy.
Yeah, Tom Barry just popped in and said, people leave Boston and move to Texas. Watch population movement. Like that's a big deal.
Yeah.
So that it is very, very true with population. Let's go back to Eddie. So Eddie, what do you see happening here the next 6 to 18 months? I love, you know, your perspective already of hey guys, just remember, this is just perception. It's not necessarily reality. We still are short. We still have short inventory, guys. So if you're an affordable housing provider, which that's what we tell everybody now, right, Eddie? We're affordable housing providers. We're not real estate investors. We're not hedge funds. We're not killing it, making a bunch of money. We are affordable housing providers. If you're an affordable housing provider, do it. Do your job. People are going to need affordable housing in the next 2 years more than they've ever needed it.
Yeah, we've got a big day on the Hill next week or the week after, I forget. And yeah, we definitely go into DC with that banner that we're affordable housing providers, especially with, you know, kind of the current climate there. But I think you've really got to break it down to the 3 areas, Tom, if you're talking about the next, you know, 12, 18 months. Economists are, you know, we interview a lot of economists at Think Realty, and we publish a lot of that. And right now, a lot of them are being silent and a lot of them are being vague, and they always are in situations like this because there isn't enough data that they can amalgamate to give us a trusted response. And so they just kind of stay silent or they stay vague. But I think to the retail market, I kind of want to hit real quick 3 things. The retail market, I believe, is just going to, I believe that we're seeing a short blip in slowing of demand, but I think that's going to have a resurgence, and that really depends on the Federal Reserve, right? Like the Federal Reserve, you know, a couple of quick stats that everybody should be aware of is that right now at, you know, the numbers around 6%. If you go back 12 years under, you know, and this isn't a political statement, but if you go back 12 years under the Obama administration, we're still lower at this point in interest rates than we were then. However, the average American is making $1,200 more per month than they were 12 years ago. So the interest rates are lower than 12 years ago, and the average American family, sorry, is making $1,200 more per month. And so, you know, the math does not work out. Now, I guess I understand inflation, but inflation numbers say that the average family is spending $400 more per month than they were 5 months ago. Well, again, there's a $1,200 spread here from 12 years ago. And the thing is the American people and I won't go into the details of why, but since 1967, the American population shifted from this house is what I need and I'll save for and I'll buy, to 1967, we see a massive trend in the consumer mindset in housing. And in 1967, we start seeing a shift to this is the property I deserve, not the property I need. And so the American population looks at these assets and they go, from a retail perspective, this is what I deserve. So what happens is when you're standing in the candy aisle and the boy or girl says, this is what I deserve candy. It all comes down to, but how much money do you have? Well, I have 50 cents. Well, then because you deserve it, you can spend it, right? Because it's yours. But the reality of it is that you just pulled down the window by which you can purchase. And that's what's going to happen, I believe, is that the American population is still going to buy, not because they need housing, but because they believe they deserve housing. And they'll just shorten the window, or they'll bring into focus what they can afford. The American population could really care less about the amount of the home. What they want to know is how much do I qualify and what is my monthly payment? You know, that's why we can get away with Netflix going from $5 a month to, I think now they're up to like $16 or $18 a month in a 4-year window. And it's because the American population believes they deserve to have, you know, streaming at their fingertips, right? And in the end, if they can afford it monthly, they're going to spend it. And so we know that that's the mindset. So from the retail population, I think it's just a little blip, and we'll always see a blip based on the Federal Reserve. But in the end, I believe that if interest rates were 10%, the American population today, because they believe they deserve housing, would still buy it. They're just going to buy what they can afford or what they can pay for monthly. In the rental market, I believe very much what Glenn was talking about. And what happens is in consumer sentiment, like where we are right now, you're going to see rents not raised to the degree that they have been raising over the past 6 months to a year. You're going to see a little bit of a tapering off because real estate investors are, you know, as much as we say that we don't listen to the news and we don't get sucked into political opinion, we still do. And when all of a sudden everybody starts complaining that they can't afford it, all of a sudden we get nervous to raise rents, right? Because in the end, what we really want is that consistent rent check coming in. I mean, I do it. And when everybody else is raising rents, I'm like, oh, I should be raising rents. And when everybody else is saying, oh, you can't raise rents, then I sit there and go, oh, maybe I shouldn't raise rents, right? Like we're all susceptible to that communal, speak that we get in the middle of. And so I think rents are not.
I want to jump in on rents, because rents are, most people are on a yearly lease, right?
Yeah.
So part of this is like, people are just now raising rents because they probably should have done it last year, but they didn't do it last year. And now it's like, okay, the market says X, but that's $500 more than what I would, you know what I mean? So I think part of this is also lagging, you know, with the higher rents. It
sure is. It is. And I think that, you know, you've seen the massive rent increases, you know, by and large, you've seen almost a 40% rent increase in nation's housing over the last 2 years. You're not going to see another 40%. The people couldn't afford it. They would have to go, you know, all rent off of Glenn Stromberg, I think. I'm not sure. But the thing is I think that you're not going to see another 40% rent increase, you know, and again, I'm talking macro. And then last point is in the next 12 to 18 months, I think the big opportunity for real estate investors, aside from mobile homes and affordable housing, is that there's a lot of multifamily guys that are in the bridge period of lending that are in big trouble because the way they underwrote their deals are not sophisticated towards the movement of the market. And when Freddie keeps raising rates and they keep, you know, I was told on a multifamily deal last week that I could not position my self-directed IRA as net worth. That's the first time I actually had to go get a capital partner, this first time in 10 years. capital partner in a multifamily deal because they wouldn't recognize my self-directed IRA funds as my net worth. And
Wow.
so, or as any part of liquidity, even though it's very liquid and very accessible. And so also they would not recognize my I'm big into infinite banking, my whole life insurance policies. They would not recognize the cash value, the stringency of which these big banks and big institutions are underwriting multifamily to alleviate the stress of the bridge loan after the reperformance period is going to provide a lot of opportunities for multifamily investors, because there's a lot of guys in the middle, they're in big trouble.
So for you, Eddie, they actually wanted to see cash on hand.
Yeah, cash on hand and or just, you know, liquidity, right? Like here is the ironic part. I'm not a big Bitcoin investor or, you know, crypto investor. However, they would accept my crypto as liquidity, but they wouldn't accept my whole life insurance policy. And I said, do you see the irony in this? Like literally my crypto has been cut in half in the past 6 months. And my whole life policy exists forever, right? Like I can go borrow against that anytime I want to. It's right there. And so there's some irony in what we're going through right now, but yeah.
Yeah, underwriting guidelines are changing quickly on some of that big stuff. And so definitely, but I think it's a great point. Great opportunities are going to be happening for real estate investors. We just got to be looking out for them and be able to take advantage of those. So it's awesome. Jim, what do you see happening in the next 6 to 18 months? Obviously, you're in different markets than some of the other people on here.
Well, with regards to rates, owner occupied rates are like 5.8 roughly. I'm not a mortgage broker. That's roughly what they are right now. Portfolio loan with the banks I'm working with are 5.5. DSCR is running like 7.25. So that's going to go up because they're looking at a 75 basis point increase in a week and a half or whenever they're going to announce it. And then next month, maybe another 50, and then maybe another 50. So maybe we go from 5.8 to upper sixes. I don't know. We'll see on owner occupied. So I think if anybody has, for investors, Tom, I think it's important that you don't carry credit card debt, that you be extremely cautious with your lines of credit, that you have an exit out of all your short-term loans. I'm not talking about just me, Tom, just what I think in general. Is that okay?
Yeah, go for it.
I think Eddie is absolutely point on. Again, I really like the way you think, Eddie, on these bridge loans for people. Those are like hard money loans worth millions of dollars that they're going to struggle to get out of. I think that's an opportunity. So anything short-term, any kind of bad debt, leverage debt that isn't good, that's going to expire soon, you should be getting out of that. And I think if you've got stuff you need to refi, you're a little late, but you can still go. Just choose that leverage point, choose which financing you want really carefully. You know, the DSCR loans, for example, everyone loves 30 years fixed and you don't have to give tax returns and all that. But be careful because they've got high prepayment penalties. 5, 4, 3, 2, 1 is the way they work. So if you're thinking you're going to go to a 30-year fixed with rates of 7.5, you don't care. You're like, screw it. I don't care that it's 7.5% because in 24 months it's going to drop. Well, you're going to be hit with a big prepayment penalty. So knowing your leverage points is really, really critical. Managing your cash is super important. Remember what happened in COVID? Everything shut down and nobody had cash on hand. And businesses went out all over the place. By the way, thinking back to COVID, Tom, I was thinking about this the other day. A lot of really smart economists thought we were going to go into like a depression. And there was a lot of people advocating that landlords need to start selling all their assets. And thank God that we didn't, because the last 3 years have gone up like crazy, both on value and on rents. So if you didn't listen to the super smart economists during COVID, kudos to you.
Yeah, that's
So
actually
just-
one of the, and even the rent memorandums is one of our big talking points at the Day on the Hill coming up. I actually believe it's the number one reason for inflation is the rent increase. And the reason why there's so much rent increase was because of the rent memorandums. I don't have time to go into all that, but you know, there is a correlation between not having anything on the market and prices. So, and when you cannot evict bad tenants, then good tenants end up having to pay more.
Be
So-
careful where you invest. I mean, let's go back to that,
Yes,
Tom,
that's
because
true.
you should really be tightening your buy box a little bit, and really the market that you invest in is really critical. And Tom Barry, you say this all the time, like know which states you, and some of them change. Like, thank God here in Virginia, we got a great governor in January, right? That's a win. Because it makes, we just went from a 14-day pay or quit back to a 5-day, June 1st. Thank God I haven't had evictions in years, but you've got to be able to, it also created a lot of opportunity to buy, by the way, for me. So, man, bad policy also creates opportunity.
Mhm.
Yeah, so going to what Eddie said, I'm going to go to you, Wendy, here. I was thinking like some of these bridge loans that multifamily people are going to be, you know, having issues with also might give an opportunity for a lender to also help out in those situations as well. So I know that's part of Tom Barry's, you know, portfolio, and what he tries to do is help people with some of that. But I think it's going to be a great opportunity for lenders as well in that space. I know you play a little bit in that space, right, Wendy?
Yes, and keep in mind that you don't have to be a big lender to get in on this, on bridge loan kind of opportunities, and you don't have to do it by yourself. You might have some money that you can combine with someone else that you know, and put the same people in that same position to be able to take over anybody that needs to get out of that bridge loan. And if you're doing that, make sure you ask for equity in the piece, because this is a really great time for you to make a whole lot more for your future. If you're in some kind of a loan like that. There's a couple of things I wanted to talk about the DSCR loans out there. There is a prepayment penalty, and 5 years sucks. There's a lot of them out there that are 5 years. However, there are things you can do. Some of these companies offer a 3-year prepay. You can actually buy a different type of loan, whether it's a 10-year arm. Who cares if it's 10-year? You're going to redo it anyway. Or it's even a 5-year arm. Sometimes they're doing a 10-6, which means after 10 years, it'll adjust every 6 months. But you can buy those down to where your prepay is at a 3-year. And, you know, it's 3%, 2%, or 1%. When you really weigh the difference, you got to think about what is it really going to cost me if I want to refinance it 2 years down the road. I'm paying a 1% fee. Does that really matter? You have to figure out whether or not that works for you. Bottom line, folks, most people suck with their money. They don't know how to handle their money, which is why we're in the position, or many people are in the position that they're in now. Way high credit, and their savings accounts are blank again. This is a great opportunity for any of you investors that have been listening to what everybody's been saying for the past 6-8 months, which is hoard your cash. You know, get leverage the properties that you can, that are still cash flowing, and hoard your cash, because you're in a great opportunity to step into some subject to situations. If you haven't done subject to, you need to look into it, because this is a great opportunity for that. And you have a great opportunity to help people with a subject to opportunity that you can leave them in the house for a year. They're making the money to pay it. You know, and have them pay extra toward it. There's all kinds of things you can do to set yourself up to have that catcher's mitt to take on all of this stuff that's coming down the pike. You need to be ready for it, but also make sure that your goal is to help that other person and not just put cash in your pocket.
Good advice there. So I'm going to kind of move to, like, you know, the next like 12 to 18 months. And then also, what are you doing to pivot with Glenn and Tom Nardone? So kind of try to answer both of those. I think the other three started answering it, but I'm going to kind of go back to them as well. Just kind of see what they're doing to kind of pivot, or if they're changing anything that they're doing now. So Glenn, why don't you start us off there? What do you see the next 12 to 18 months? What are you doing? Are you pivoting at all? Are you changing anything that you're doing now?
Well, first of all, I don't have a crystal ball. I've been wrong the last 3 years, as you know. You like to remind me, but that's an inside joke with Tom and I. But yeah, I mean, I literally, like, I go back and forward. I really don't know what's going to happen. I do believe we're in uncharted territory. I saw there's a chat on there about private lending. I think this is a time for private investors. I know that our investor base, there's a lot of people scared right now, right? The stock market's spooking people. They're looking for alternative assets. Like you said, Wendy, if you're giving them good, solid returns back with real estate, you're in good shape. You're in real good shape. But as far as what I'm doing personally is, I couldn't feel better about my asset class. I'm an affordable housing provider, and I'm not worried about anything in any way, shape, or form. We're definitely going to increase our margins because we can. There's no ifs, ands, or buts on that. And I think there's going to be the next 12 to 18 months, there's going to be more opportunity. I agree with what everybody is saying about real estate is, it's location specific for sure, right? I mean, you can break it out in general, red states and blue states. That's a good indication, right? And then there's other things too. But even in Texas, right? Like I live in downtown Fort Worth, okay? The residential market's booming. They say there's 3,000 people a week moving here, but I look in downtown, there's commercial space that's not filled. A bunch of it, really. There's really a bunch of it that's not filled. So, it's going to depend what's going to happen. It depends what area you're in. I think I agree with what Eddie said earlier about apartment complexes. I think there's some guys in trouble there. There's just too many of them. They're being overbuilt. I wouldn't be comfortable in a lot of commercial deals right now because that's not my space anyway. But I believe in, like I say, if you're in affordable housing, you're in a really good place. And I see tons of opportunity the next 12 to 18 months. And I think raising capital from private investors is going to be a whole lot easier because we're already seeing people getting out of the stock market. So that's what I'm seeing.
No, that's absolutely true. People always pull out when they shouldn't pull out, right? So, I listen to a lot of different shows, and a lot of people are like, no, everybody's pulling their money out of the stock market. This is like the exact wrong time to pull their money out of the stock market. But people have a problem then. They have this money and they need to know what to do with it. So this is a good time to be able to start going out and raising private money. Because you have a different solution to their problem. Hey, Glenn, I don't think you have any events or you don't offer anything like that, but if somebody wanted to get a hold of you, how would they do so?
Our website is stromberginvestmentgroup.com. Always, if they want to get a hold of me, they can call me on my cell phone, 817-966-1258.
There you go. Don't put them on any lists that are going to be like telemarketing lists.
This is if you want to call
telemarketers
hour,
it seems like calling me. Thank you, Glenn, for investing in our community. Appreciate your time with that. And then Tom, why don't we go to you? What do you see the next 12, 18 months, and what are you doing to pivot, to change, or doing anything that right now doesn't sound like you're changing much, but let everybody know what you're doing.
Well, being that I don't live on this coast, I spend a lot of time in hotel rooms over here around Punta Gorda, Port Charlotte. One thing I do in the morning is when I get up, I go around the breakfast area and I talk to other people staying at these hotels. And I'm like, well, where are you from? What brings you in the town? And I can't tell you how many times I hear people say, we flew down here and we're looking to buy a house in Southwest Florida. So that to me says I'm pretty well insulated against anything that might happen. But what I am going to shrink is we were focusing on building like a house in the $600,000 range, which is about 1,800 square foot under air. And we're looking at now about pushing that square footage under air down to about 1,400 square feet. Because if we could deliver that to the marketplace for around 400,000 or in the high threes as an advertised price, then that'll leave us still a generous profit margin, but it'll bring somebody into a somewhat smaller, more conservative house. And that will be the low end of stick site built homes because, it's about $190 to $200 a square foot to build now. So, I mean, you can only build really, it's hard to bring to the marketplace a 1,500 square foot house that you can bring to sell at a price that makes any sense to build it. Okay. But
Yeah.
just under that is the mobile home market. And as long as I can bring a 4-bedroom, 2-bath mobile home on a piece of land that I can pay full retail for, a lot of times we're getting the lots for between $15,000 to $30,000. I could put a mobile home on there that costs me wholesale about $100,000. So I could be all into the transaction for like 130, and I could still offer it to the marketplace at 250. And that's an 1,800 square foot home. So the cost per square foot for me to bring a mobile home to the marketplace covers that affordability range that people can't quite afford to get into a single family home, but they'll get into a nice mobile home. And so that's the adjustment I'm making, is I'm keeping it toward the low end, because you really can't get into the market of home ownership on either a mobile or a single family home for much less than that price range. So sum it up, staying away from 600, shrinking the size, shrinking the price, and still having a good profit margin. That's my shift.
And do you have an event that you're planning, Tom?
Yes, it's next June. It's going to be the same event again at the same place at Fisherman's Village in Punta Gorda. Beautiful place. Tom, you were a part of that. Wendy, you were a part of that. Glenn, you were a part of that. It was awesome. We'd love to have you guys back again next year. We're just working on the website for it right now. It's going to be held June 22nd through the 24th. And if anybody out there has an interest in that, just email me, tomnardone@me.com. And I'll be happy to send you a link to the website when we get it set up, and it'll tell you all about the event and who's going to be there.
Yeah, awesome. And even if you just go to relax for the weekend and have fun and hang out with cool people, it's a great event.
It is a great event and a great environment. You feel like you're on a cruise ship when you're there, without being on a ship.
Thank you so much for investing in the community, Tom. Appreciate you being on. Eddie,
thanks for having me, Tom.
I'm going to go back to Eddie and then back through the other three people here. But I still remember at the Good Success Mastermind, Eddie, when Robert Knight was selling like 1,500 square foot houses, like brand new construction, for like 225. And we're like, huh. And then like at those same houses today now are like 4, 5, 600,000. And I'm just like, we should have just bought as many of them as we should just forgot the rest of the mastermind and just brought a bunch of money to the table and said, we're buying as many of these as we possibly can. Robert, how can you get your operations up and running faster? And let's build as many of these as we can, 4 or 5 years ago. But hindsight's always 20/20. But what are you doing, Eddie? What do you see next? I think you might have already answered that. What are you changing? What are you doing differently? And then we'll get into how people can get a hold of you and what you've got going on and how people might be able to contact you.
Yeah, I mean, obviously I'm a private equity guy, so I've bought 7 companies this year, sold 3 of them. I'm never gonna probably stop that until retirement age. But from a real estate perspective, I am heavy into building new construction in that same area that Tom's talking about and others. I'm building down in the Cape Coral area up through Port Charlotte, Punta Gorda. I've got 9 under construction right now. I'm staying in that exact same spot that Tom's talking about. I'm trying to keep them all under a 650 selling price down there. And I'm only building on water. So whether it's fresh water, salt water, I build on water. And I bought, thankfully, Tom, back in that day, I started buying a bunch of lots. And so I do have the benefit of having a bunch of lots that I purchased at 20, 30, 40 grand. Now I'm getting people offering me 250 for those same lots, but it's far more valuable to build on them and sell them retail. So the 9 that I have under construction now, I might keep 1 or 2 like I always do, but I literally have people walking the streets down there sending me text messages like, I have an Airbnb down there. It's a little 3-bed, 2-bath on saltwater. And I had a guy text me the other day and then called me and said, I'll give you $750 for it right now, cash. And it's just like the market's just hot right there. So I'm going to continue that within reason. I'm probably not going to build 50 houses down there, but 8, 9, 10 at a time doesn't hurt me. And I can carry that if I have to for a while. And then lastly would be this fund with Glenn. I mean, for me, We structured our mobile home fund in a way that people only have a mandatory hold time for 12 months. I think right now people are so scared and they don't want to get stuck in long-term assets, but they want their money tied to long-term assets. And so Glenn and I come up with a strategy to be able to hold people's money for 12 months. And if they want back out, they get a solid return, and it's tied to mobile homes on land, which is just, I mean, an asset class that's crushing it right now. And so that's a big one. And I'm putting a lot of my own capital in that as well, because it's just it's a tried and true investment. And so those are the two big shifts. And then, you know, the occasional multifamily deal. If some guy's got a deal falling apart, I'm always ready to jump in on a deal. So.
Awesome. So how can somebody get a hold of you? I think you might have put some of the information already in the chat bar, but I know you all, I also want to at least pitch the, not pitch, but just let everybody know about your Think Realty events, American Association of Private Lenders, maybe just let there be a little bit of a glip on that.
Yeah, the American, if you guys ever need capital, I mean, capital, it's so funny because all my people at my American Association of Private Lenders, you know, they're like, I wish we could find deal flow. And then I go to my Think Realty events, they're like, I wish we could find capital. It's like, if I get you two people together, you know, we might have success, but I don't know why I can't get the two groups together. But AAPL has our big, you know, probably 700 to 800 person event coming up at Caesars Palace in Vegas in October. You can go to aaplonline.com if you want to find out more about that. And that's if you really need private capital. And then Think Realty will have 2 events next year. We'll stay in Tampa and Houston. That's plenty of real estate events for me. We used to do 4 or 5 a year. I'm really satisfied with 2. So we'll do those. I think our first event comes up in Houston in March, but you can always email me at ewilson@thinkrealty.com, ewilson@thinkrealty.com.
Awesome. Thank you so much, Eddie, for being on and investing in our community. Appreciate you. And everything that you do, real estate related, not really real estate related. Been a good friend for a long time and appreciate you. Jim Ingersoll, what are you seeing? What are you doing differently, if anything? And then I know you have Dealmaker coming up and you might already have the next one planned out. I'm not sure, but how can people get a hold of you? If
It is not planned out. Jim, I mean, I'll put my email in the chat, is fine, but.
Okay.
Like Tom, I also like that same market, Tom. I'm going to be flying into Punta Gorda in a few weeks. And I like Lee County a lot as well. I think all those Florida markets have been really good for me. So just looking for a new opportunity, but also tightening my buy box a little, Tom, and being really careful on leverage and stuff like that as well. So just kind of waiting to see what happens here, Tom, next. I don't know. I'm not doing many flips. I love to buy and hold, but I'm not going to buy something wrong right now. And so I'm going to tighten my buy box a little and continue to look in Florida and in Virginia and take what comes without pushing something into my box.
That's great advice, Jim. And so has that been a while since you've been doing that? Have you been tightening for a while? Have you?
No, no, not really. Probably the last 3 months, Tom.
Okay.
I'm finishing up. Yeah, I mean, we've done a lot of acquisition. We've had a big year on acquisitions, especially in Florida. So I'm just finishing up a couple of refis right now and then looking for the next opportunity, but I'm not going to push stuff into my box either.
Yeah.
It doesn't fit it. It's okay with me. I'm good. You know what I mean? Life is good.
Yeah. So even though like we're under market, we don't have enough houses, we still have Jim saying, I'm not going to make deals work that, you know, for my fix and flips. And Jim's done lots of fix and flips. He's got a lot of experience.
I've done hundreds of them, but I've only done, I think, 3 this year, Tom, and I'll probably only do, I might do 2, 3 next year, and that's it. I'm good.
So he's
I'm
focused.
helping my kids a lot now, Tom. Both my daughters are investing, and I'm working with them a lot.
Awesome.
And that's the best thing.
And you're focused more on your portfolio, on your own rental.
Yeah, and my kids. My kids are building their portfolios, Tom. It's hard to believe I've got kids this age, but
Yep.
And
grandkids.
Yeah, I do. Yeah, I got to figure out how to get them involved. I'm thinking about that right now, Tom.
Awesome. So Jim, I think did put his Jim Ingersoll or Jim at elitedealmakers.com is his email. Great guy. I'd encourage everybody to get in touch with him if you can. And spend some time with Jim. So
Brandon, you're right. You're building in some of those markets, and we do need to connect.
Yep. So thank you, Jim. Wendy, last but not least here, what are you doing? I would like to know a specific question for Wendy. Have you been underwriting your loans a little differently? I mean, obviously I feel like we've tightened up a little bit on our loans that we do with Conduit Capital. But what are you doing? What changes do you see here, and how can people get a hold of you if you got anything else going on or any kind of event that you want to promote?
I actually put my info over in the chat box, but we're extremely conservative and have been for quite some time. In 2019, we actually changed everything about the way we underwrite, and we stopped doing any loans where the after repaired value was above 500,000. We really like that bread and butter market, that recession proof market. We love those smaller loans. And now here we are in, 2022, sitting with, 200 loans in our fund, and none of them are high-end properties. So, we're feeling really comfortable going in to what's going on right now, because we know we're not going to be sitting here taking back all these high-end properties. We've been down that road, and it is not fun. What scars are good things to have because they keep you safe for the future. So we're in a really good position there. We started personally investing in some self-storage, and we're really happy that we're there. That is another recession-proof type of business to be in, because, all these people, when they're leaving their houses, they're still storing their stuff. So that's going to be, I think, a good move for us. But we're tight underwriters to begin with. We always have been. Like I said, we made that change in 2019, and actually at this point, we are thinking about dropping our interest rate. To tell everybody a little bit about that. So right now we're sitting at 10.99, and we are actually coming up with some options to have that interest rate lower just a little bit between now and the end of January. So those are some of the things that we're doing. We're really looking forward to see what's coming down the pike. We're going down an unknown path. We've never been here before. And it's yes, we've been through these kinds of things, but the causes of them are different. So you don't really know what that outcome's going to be. Hoarding cash, that's another thing that we've done here at our company. We're sitting on, we're hoarding some cash. We're just trying to be ready for whatever happens. Who knows? Who knows what's really going to happen? It is. We really don't know. We just know that we've got a serious safety wall around us, and we're hunkering down.
Yep, that's good. So I appreciate everybody for being on today. Thank you so much to Eddie and to Glenn and to Tom and to Jim and Wendy. Appreciate everybody for jumping on. Just to kind of wrap it up, I kind of feel like there's always opportunity. There's always opportunity, and it really is up to us to go out and find it and try to bring our skills, our network, the things that we know to the table. And as long as you can continue to do that and be willing to kind of shift, be willing to kind of change what you've been doing over the years, you cannot get stuck doing the same thing forever. It's interesting to hear Wendy talk about, lending, and then she's doing short-term rentals, and then she's doing self-storage, and there's completely different, marketing strategies and everything that have to do with all those things. And in different parts of our life, different times of our life, Jim kind of brought up, hey, I'm good. Like I've got my cash flow. I got things going on. He's at a point in time where different priorities are priority. There's different things in his life. He wants to spend time with his kids and wants to spend time with his grandkids. I see lots of pictures on Facebook with his grandkids on the boat and at the beach. And I love to see that as well. But there's definitely opportunity about ready to happen in a lot of different markets. Just make sure you guys are ready. I love the cash. I think people don't keep cash as much as they should. And it's even more important when there's a little bit of uncertainty. So definitely appreciate all that. We for us, we have just stuck to the fundamentals. Like we made a shift. I'll be honest with you, made a shift in June. I sat down with the whole leadership team company and said, this is what we're doing. We're stopping what we've been doing for the last 2 years, which we knew everything was kind of inflated, but we just kept going with it. And we're like, nope, this is what we're doing. This is our new buy box. This is the fundamentals. We have plenty of buyers for this product. If we can't produce this product, we're not going to do the deal. Like, this is it. This is all we're doing. And it's been great. It really has been. And I think our last month was one of our best months we've ever had. And going forward, I think September, October are also like super, super great months for us. And kind of, I like what Wendy said about being contrarian. Like, she's thinking about lowering rates. And I kind of even, I'm still scratching my head on
I
that.
saw you do that.
I was like, because I'm thinking like Tom Barry would say, let's raise rates during this time and I would agree with that, maybe as a hard money lender. I remember my first hard money loan, guys, was 5 and 18. Okay. So this, whatever you're getting now, 2 and 12, which is a very normal type of rate, 3 and 10, 3 and 11, 3 and 12, 3 and 13. That's what it is today. So I love that contrarian. And for me, one of the things I'm doing that's contrarian is, a lot of people say when you're going in recession, like tighten everything up and let go of people, and which we did. We've done that for the last 2 years. But now I'm like, I need to go more full speed. I need to hire more in that construction and make sure that we can build the operations for when, as this market's going to give us more deals to be able to make happen. So that's kind of what I'm doing. I did talk a lot more about what we're doing personally on the last call. So if you guys want to go back and watch the last call, I know Adam had put that in the chat bar. All these calls are recorded. They're all on our website and they're all on YouTube and other places for you guys to be able to watch all the way back to the crypto calls at the beginning of the year as well. So if you guys want to take a look at that, that'd be great. Again, I want to remind everybody, our next call is with Jennifer Stewart. We're going to talk about data, marketing, lead generation, negotiations, and closing. And no better to listen to and hear from than Jennifer. She does a great job and knows what she's doing. She is on her game, right, Wendy? I promise you will. If you want to learn and I'll be honest with you, even for the pros, even for the guys that have been doing this for 40 years, I promise you it'll be a valuable call next week or next month, October 8th. That is a Saturday. The next 2 calls will be Saturday. Maybe I do need to switch these calls to Friday, right, Jim and Wendy? So I had to go to Fridays to get Jim and Wendy on this call.
Thank you.
But
you had 84 people.
I know this is our second largest call of all time. We had 104 our first call, but anyways, definitely appreciate everybody's time. The next call after that, Tom Barry even popped in and gave us a lot of insight today. We'll get a lot more of that from him in November, and we'll be a little bit farther down the road. Can't wait to see everybody at the Dealmaker next week and Quest Expo the week after that. And then the free for all event. Jim, I'm way oversubscribed. I don't know where I'm going to put people. We have 160.
Create a waiting list, Tom. That's
Yeah,
what I did.
Well, it's a free event, so it's like I don't know about the waiting list here.
People need
So
to have urgency. They won't
Yeah.
wait so long next time. That's what I do.
I'm thinking it shouldn't be free anymore, but John
There you
does.
go. I agree. Tom and Wendy, let me know when you get to Richmond Monday.
I will be there
Okay.
Monday. Yes. Can't wait to see everybody. Goodsuccess.com if you want to find out more information about us and what we do. And my cell phone number for everybody who's on the call is 219-742-7957. And my email address is TOLSON@goodsuccess.com. So TOLSON@goodsuccess.com. Love to chat with everybody. Thank you again for everybody jumping on the call. Appreciate everybody. Have a good Friday, and we'll see you guys at the upcoming events. Have a good day. God bless.
Thank you, Tom.
Thank you, Tom.